Happy Friday, everyone. And we have to acknowledge the date right away. It's Friday, February 13th, 2026.
A little spooky.
Yeah, I'm not usually superstitious, black cats, ladders, whatever.
Yeah.
But if you're watching Moderna today, you might be feeling a legitimate chill.
Oh, absolutely. It was a lot to process this morning before, you've even had your first cup of coffee.
Right, because you've got this earnings report that feels like the company's living in two completely different realities. It's almost schizophrenic.
It is.
On one hand, you have this incredible financial discipline. I mean, they've cut billions in costs. They're sitting on a huge pile of cash.
That's the Good Friday part of the story, I guess.
Exactly. But then, on the other hand, you have this horror story unfolding with the FDA over their flu vaccine, a real Friday the 13th plot twist.
Mm-hmm.
So for this deep dive, our job is to sort of reconcile these two worlds. We've been through the press release, the slide deck, the whole conference call transcript with Stefan Bancel and his team.
And the nuance is what's getting lost. The headlines just scream revenue down, FDA rejection.
Right.
But if you actually dig into the transcript, the story is more like efficiency way up and a really fascinating, complicated standoff with the FDA about how we should even be designing vaccines.
And that's our roadmap. How did they cut all that cash?
Yeah.
Why is 2026 suddenly all about international markets?
Yeah.
And what on earth is going on with that refusal-to-file letter?
Yeah.
So let's start with the money. Looking back at 2025, I mean, those top-line numbers are jarring.
They are. The full-year revenue for 2025, it came in at $1.9 billion. That's a 40% drop from the year before.
Oof.
Yeah, if you're just used to those pandemic-era numbers, that stings.
It just screams shrinking company. But, and this is the key, that number actually beat expectations.
It did. For Q4 specifically, they pulled in $678 million, and guidance was actually lower than that. The drop isn't a surprise, The market is just settling. We're not in that pandemic frenzy anymore.
It's a normal seasonal market now.
Exactly. But the thing that really had analysts paying attention wasn't the revenue drop, it was the expense drop.
This shrink-to-grow thing. They cut operating expenses by, what, $2.2 billion?
$2.2 billion, a 30% decrease in 1 year.
Okay, so how? How do you cut that much money out of a biotech company without the wheels completely falling off? I mean, usually that means you're firing scientists and halting trials.
And that's the fear, right? But Bancel was really specific about this. It wasn't about cutting the R&D muscle. It was about cutting the pandemic-era fat.
So what does that mean, pandemic fat?
Well, think about it. In 2021, 2022, they were building for a world that needed infinite vaccines. So they had massive costs for contract manufacturing, just paying other factories to be on standby.
So they were paying rent on factory space they didn't even end up using.
Exactly. They wound all those contracts down, and they got inventory under control. Remember all those write-downs for expired doses?
Yeah.
That's mostly gone. Plus, and this was interesting, they're leaning hard into AI.
Really? How so?
Bancel said AI tools are now in every part of the business, just driving productivity. They are literally doing more work with fewer people on the admin and operations side.
So the robots are balancing the checkbook.
In a way, yeah. And all that discipline showed up in the bank account. This was the biggest surprise for me, and I think for the market. Oh. They ended the year with $8.1 billion in cash.
Which was way above what they guided. They told Wall Street to expect, what, 6.5, maybe $7 billion?
Right. Coming in over $8 billion is a massive beat. That's more than $1 billion cushion no one expected them to have.
It completely changes the conversation.
It does. At $6 billion, people are asking, when do you need to raise more money? At 8.1, nobody's asking that.
So where did that extra billion come from? You don't just find that in the couch cushions.
It's the boring, unsexy CFO stuff, which is always the best kind.
Right.
Jamie Mock, the CFO, he broke it down. It's just better working capital management.
Okay, so unpack working capital for us.
Sure. It just means how efficiently you're handling your short-term cash. So they collected money that was owed to them, receivables, much faster. They kept inventory levels tighter, so cash wasn't just sitting in a warehouse. And they spent less on capital expenditures, about $100 million less than they'd planned.
They just ran a tighter ship.
A much tighter ship. And they also drew down about $600 million from a credit facility. But when you put it all together, they've secured the runway. In biotech, cash is time. And right now, Moderna just bought itself a lot more time.
Okay, so financially, the ship is stable. They've trimmed the sails, stocked the pantry. Now, let's look at 2026. They're projecting a return to growth, right? Targeting up to 10%. But the part I found fascinating was the structural shift. The whole geography of the company seems to be flipping upside down.
This is the key takeaway, really. In 2025, Moderna was still a very U.S.-focused story. 62% of their revenue was from the U.S. for 2026. They expect that to be a 50-50 split.
Wow. That's a huge swing in just 12 months. So why? Is the U.S. market just tapped out?
It's two things. First, yes, the U.S. market is becoming a bit of a grind. It's declining a little. And the regulatory side, which we'll get to, is a headache.
Right.
But second, the international markets are treating mRNA technology as a strategic asset.
What do you mean by strategic asset?
Well, look at the UK and Australia. They're not just buying vials of vaccine. They're paying Moderna to build manufacturing plants on their own soil.
Ah, so it's a national security play.
It's absolutely national security. After the pandemic, these governments all said, we are never waiting in line for a vaccine again. So these deals are about self-sufficiency.
So it's not just a commercial sale. It's a government contract for biosecurity.
Precisely. And that revenue is incredibly sticky. Starting this year, they're fulfilling those contracts. Plus, they signed a 5-year deal with Mexico. They have a new deal in Taiwan. Things are moving in Brazil.
It really seems like while the U.S. is making things more difficult, the rest of the world is basically rolling out the red carpet.
That's a pretty fair way to put it. And the product they're rolling it out for is the new one, MNX Spike.
Right, the new COVID shot. I saw the numbers on that, and they were pretty strong. In the U.S., they got 24% of the retail market.
And if you just look at seniors, the 65-plus crowd, they got 34% of that market.
Which is the market that matters most.
It's where the volume is, it's where the need is. And that vaccine just got approved in Canada and Australia, and they're going for Europe and Japan this year. So the commercial engine is working, the tech works.
Okay, the engine is humming. But now we have to talk about the brick wall they just ran into. The FDA.
Yeah.
The flu vaccine. This is the big Friday the 13th news.
The dreaded refusal-to-file letter.
Let's clarify for everyone what that actually means, because refusal to file sounds an awful lot like rejection. Does it mean the vaccine is bad?
No, and that is the most important distinction here. An RTF, a refusal to file, is procedural. It does not mean the FDA looked at the data and saw a safety problem. It does not mean they think it's ineffective.
So what does it mean?
It means they looked at the application itself, the paperwork, and said, this is incomplete, or this doesn't meet our administrative criteria to even begin the review.
So it's like you turn in your term paper and the professor hands it right back to you.
Exactly.
Not because the essay is bad, but because you used the wrong font or something.
A very frustrating and very expensive version of that, yes. It creates a huge delay. They have to request what's called a Type A meeting with the FDA, which is basically an emergency meeting, to figure out what went wrong.
But the immediate consequence is no standalone flu shot for the U.S. market this coming season.
Correct. And it creates this domino effect. Because the real prize everyone is waiting for is the combo vaccine.
Flu plus COVID in one shot.
That's what patients want. It's what pharmacies want. But you can't get a combo vaccine approved if one of the ingredients isn't approved.
Right. Makes sense.
So since the flu component is stuck in regulatory limbo in the U.S., the combo vaccine is stuck too. The U.S. filing for that is now on hold.
This is the part, though, that is just wild. It goes back to that U.S. versus international theme. You called it a tale of two markets.
It's fascinating and, frankly, a little disturbing. While the U.S. FDA issued this refusal to file, the exact same data package, the exact same one was sent to regulators in Europe, in Canada, and in Australia. And guess what?
He accepted it.
Accepted. It's under review right now. In fact, Europe is reviewing the combo shot as we speak. So we're in this bizarre world where Europe could approve this thing while the U.S. hasn't even started the clock.
Why? What is the disagreement here? Is the FDA just being tougher?
It seems to be a philosophical clash. It's about strain selection. This gets a little technical, but it's important.
Okay.
The flu virus mutates all the time. The old way of making vaccines is slow, so you have to guess way in advance which strain will be dominant.
Right. You guess in February for the virus that hits in November. It's a crapshoot.
It's a total crapshoot. The whole promise of mRNA is speed. You can wait longer, see what's actually circulating, and then make a vaccine that's a perfect match. International regulators seem to be embracing that. They want better strain matching.
And the U.S. doesn't.
The U.S. system is just, it's built on that old, slow timeline. And they seem to be sticking to these rigid old criteria. Hoagie, on the call, he was basically arguing that the FDA is missing an opportunity to use new tech to better protect people, especially seniors.
So the FDA is trying to fit a brand new Ferrari engine into the rules built for a horse and buggy.
That's a really good way to put it. And for now, the horse and buggy rules are winning.
Man, it just highlights the risk of being so dependent on one country's regulator. That international pivot is looking smarter by the minute.
Absolutely. If they were 100% dependent on the U.S. right now, this stock would have been a crater today. Diversification is saving them.
All right, let's step away from the respiratory world, because for a lot of people, the real promise of Moderna was always the moonshots, the stuff that goes beyond preventing the flu. I'm talking about oncology.
Right. This is where the whole conversation shifts. We're talking about INT, individualized neoantigen therapy. This
Mm.
is the big partnership with Merck. And it's not really a vaccine, it's a therapeutic. It teaches your own immune system how to hunt down your specific cancer cells.
And they just dropped some new data on melanoma skin cancer that looked, incredible.
It is. It's 5-year data from their phase 2 trial. And in cancer, durability is everything. You know, a lot of drugs work for a year and then the cancer comes roaring back.
Sure.
But here, the benefit is holding. After 5 years, they're still seeing about a 50% reduction in the risk of the cancer coming back or death compared to the standard of care.
50%. Just pause on that. You're basically improving someone's coin flip of survival.
It's potentially life-changing. And the big news from this call is that it's not just a melanoma thing anymore. They announced that their phase 3 trials for both muscle-invasive bladder cancer and for renal cell carcinoma, so kidney cancer, are now fully enrolled.
So that's 3 different major cancer types, all in late-stage trial.
Exactly. Melanoma, bladder, and kidney. This is what moves the platform from, being a respiratory vaccine company to being a broad cancer-fighting platform. And they've hired for it. The new chief development officer, Dr. David Berman, is a big-time oncology guy. It shows where their focus is shifting.
Speaking of other things, there was another vaccine that got a mention that feels like a total sleeper hit, norovirus.
Ah, yes, the stomach bug.
I think everyone listening has a personal horror story about norovirus. It might be the most miserable 48 hours a human being can experience.
It is brutal and so contagious.
So why is Moderna even bothering with this? Is there really a market for a stomach bug vaccine? You get sick, you drink some Gatorade, you move on.
That's true for us. But they're not targeting us. They're targeting older adults, the 65-plus crowd. For an 80-year-old, norovirus isn't just an inconvenience. That severe dehydration can be fatal. It leads to a ton of hospitalizations every year.
So it's the same playbook as flu and COVID, protect the most vulnerable population.
Exactly. And here's the best part. There is no vaccine for this. It's a wide open market. Other companies tried to make one for kids and failed. Moderna's just flipped the script. They're targeting adults who've had it before, and the phase 3 trial is fully enrolled. We should see data in 2026.
If that works, they have a monopoly on a brand new market.
It's a very, very smart, under-the-radar play.
And real quick, they also mentioned rare disease, something called propionic acidemia.
Right, the PA program. That's also fully enrolled, data coming in 2026. But the interesting part there was the business deal. They partnered with another company, Recordati, to handle the global launch.
Why hand it off?
It's that shrink-to-grow discipline again. Moderna does not have a specialized sales force for rare diseases in, like, Italy or Japan. Instead of spending millions to build one, they just outsourced it to a company that already has one. Very smart.
So let's pull all this together. You've got new leadership, a solid financial framework for 2026 where they're still spending big on R&D but keeping costs down. What's the synthesis here? What's the one big takeaway from this Friday the 13th report?
I think it's that Moderna is in a transition year. 2025 was about proving they could be disciplined, and they did that. They cut the costs, they saved the cash. 2026 is about proving they can grow again without the pandemic.
And doing it mostly outside of the United States.
That is the key. They are betting their 2026 growth on international expansion, and they're betting their long-term future, 2027 and beyond, on that oncology pipeline. The U.S. respiratory market has become a regulatory maze, so they're rationally diversifying away from that risk.
It's a bold strategy. Basically, if the U.S. is going to make it hard for us, we'll go where we're wanted.
It's a rational one. They have that $8 billion war chest to get out the FDA if they have to. But in the meantime, they're not just sitting still. They're deploying the technology where it can actually get to patients.
Which brings me to a final thought I want to leave everyone with. We always think of the U.S. as the hub of biotech innovation. Cambridge, Massachusetts, right? But when you hear this tale as two markets, where Europe and Australia are moving ahead with these advanced mRNA vaccines, while the U.S. is stuck on a procedural issue, it really makes you wonder.
It raises a really uncomfortable question, doesn't it?
Are we starting to see a future where American inventions, made right here, actually reach patients in London and Sydney, before they can reach patients in New York or Chicago. And if that's happening, what does this say about our ability to adapt?
That is the multi-billion-dollar question. And for investors, it's frustrating. But for patients, it's potentially tragic if better medicines get held up by bureaucracy.
Something to think about this weekend. Hopefully your Friday the 13th is a little luckier than Moderna's regulatory team. Thanks for exploring all this with us.
Stay curious.
See you next time.